What is up, everybody? Welcome back to Bitcoin and Markets. My name is Ansel Lindner. Happy halving. This is a replay of our halving celebration that we had on Telegram last night. You can join that. Link should be down below, t.me/Bitcoin and Markets. We talk about a lot of stuff here. Lynn Alden responded to one of my tweets, so we go through that. Nick Carter appeared on Bloomberg. We go through that video, as well as the halving and other economics of supply shortage and everything around the halving. So good episode. Like, comment, subscribe, share, and let's get into it. Happy halving, everybody. Let's take a look at what's going on with the charts. I'll share the screen. And which one do I want to share? Let's do the chart one. All right, here we go. What's going on with the halving? Actually, let's go to the countdown first. I did check it right before I came live, and it was showing that. So I had to stop sharing this. It hit. The last 3 blocks must have come real quick. Let's share this one. There we go. 840,001. So we missed having a live stream, but we are going now. I wanted to do this a little bit, talk about the halving, talk about the content I've been putting out, and then look at some tweets that I did today and talk about those. But that's the halving. Let's go back to the price chart and see what people are doing, how it's trading. And you guys can come up live if you want to raise your hand. I will bring you in. So their Bitcoin charts, we're on the hourly, a little bit of a sell-off, but you can see that from this kind of liquidation down in this area, we are significantly over where any sort of imminent sell-off is. I don't think there's going to be any imminent sell-off. Looking at the daily chart, there is the 50-day. The 20-day crossed below the 50-day, so the next level would be to touch the 50-day. And once we get above that, it's going to be all back on. Now, this is happening on a Friday. What's the time, UTC? Did it make it? Oh my gosh. So it must have happened at like 12:05 UTC on 420. Look at that. So we got our 420 and our Friday hit. So that's pretty cool. But, okay. So yeah, it happened on Friday, and then we're going into the weekend. So there's not going to be any trading like from ETFs or even Bitcoin miners or anything like that. We'll have to wait till 6 p.m. Eastern on Sunday. That is market open. So we will have to wait till then to see what the overall market is, reaction is, because, this is a large wealth pool game now. This is not like, I saw something about Africa. There's, I think Natalie Brunell was doing some interview of some African Bitcoiner lady, and people were tweeting about, oh, Africa's the future of Bitcoin. Africa's not the future of Bitcoin. Guys, Africa is not really the future of anything. It's the future of Africa. Africa's the future of Africa. Like that's all you can really say about it. And I'm not like, I'm not downgrading it to say that it's just like India. Okay. India is going to be India. It's never going to like lead the world. It's always going to be high population with a very unique culture and just moving along. It's never going to reach out expeditionarily with a military and start taking over the world, like increase an empire of something like that. The largest empire for India is India itself. Maybe it can take over Pakistan or, Bangladesh or something, but that's like Africa. Okay. Africa is going to be Africa. It's not going to lead the world in anything. It's just going to be a gigantic kind of, not Wild West, kind of like Wild South. That's what Africa is always going to be. And Anyway, so I don't know what I got onto that. I've had a couple celebratory cocktails. My in-laws are here, and we had a makeup Easter dinner. So they were going to come over Easter and go to church with us and everything. And then it didn't work out. So they are here, and they brought some prime rib. So we had prime rib Easter do-over dinner tonight. And I had a couple cocktails on Halving party. So hope you guys are doing well. If you want to, raise your hand and you can come in and chat. I am not seeing any significant reaction. Let's go down to the 5 minute because, I mean, there is a little bias to the downside on the 5 minute. But, I mean, I wouldn't put any real stock in that. There is this kind of downward sloping trend here. But, all right. So that's that. What else? Let's look at some of the tweets that I had today. And I might have to switch my screen again. Yes, I will. So, this one. All right, so the Halving block. I want to know how fast those came, actually. Let's go to btc.com. And they have like a blockchain. I mean, I haven't done this in a long time, but that's where I used to get some of my block times. Is it tools? Let's see. No. Explorer. Okay, this is what we want. But we want to know blocks. This is way behind. This is the latest block showing 839, 968. So this is so far behind. Where are you guys going for the blocks? Let me check. I'm going to check the chat in this one. Where did I put it? In the live stream post. I'll just do it here. Put chat here. I'm not going to go live on the other platforms, but okay, let's check this out. This is not going to be good. Let's go to bid info charts. I used to look at blocks a lot more often. But let's see what we have here. Difficulty, hash rate, probability. Blocks. What am I missing here? Block time. Let's check that out. No, they didn't come very much faster. But anyway, okay. Let's go to my tweets. If you guys have a link for me to pull up, send it in the chat and I will check it out. But okay, so this is, let me make sure I'm sharing this properly. Yeah. And we'll go to my recent stuff. Don't forget the 50% off annual subscription to BM Pro. So that is a very good deal. I think it's going to go for another day after the Halving, but all right. And it's going to be in replies. Because what's her name? Lynn Alden, she responded to me today. And so I wanted to pull this out. So I said, if you are a gold bug, remember it has a 2% inflation rate, just like the Fed's target. And you can't argue with that, really, because that is true. I mean, the only way you can argue with it is to say, oh, it's 1.5%, right? And then you just prove the point. It's 1.5%. So I was kind of baiting people to say, oh, no, it's 1.5%. Okay, it's 1.5%. Now what? It's still inflation close to 2%, rounded up to 2%, right? Well, Lynn Alden took the bait. Did not think she would. I have interviewed her in the past on FedWatch. I should, I don't know, try to reach out to her and see if maybe she'll write a quick piece for Bitcoin Magazine Pro or something like that. But she says that compares supply inflation around 7% for developed fiat currencies and 1.5% for gold. Now that is debatable, supply inflation. How are you measuring that? Okay. Are you measuring that with M2? All right. What about M3? What about M5? What about M10? All the derivatives and rehypothecation and very near cash equivalents and on the run versus off the run treasuries. How are you measuring that supply of money? Well, she's probably measuring with M2, which is a bad measurement because the supply of money in the shadow banking system dwarfs the M2. You know, they created M1 and they Fed targeted M1. Then they were like, okay, this is not legit. It's not working. It's not matching the data, and we can't base our monetary policy off M1 anymore because it's like separated from reality. So we had to create M2. So they created M2, and they did that for a while, and then M2, same thing. It didn't work out. It started being all wonky, and so they created M3, thinking we need to measure the money supply for our monetary policy because we're targeting inflation. We're targeting actual money printing and money supply. And then Alan Greenspan pretty much just stopped that. He's like, well, this doesn't work. We aren't going to target these M measurements anymore. And that's why M3 was discontinued and M2 has pretty much been discontinued. I think at least, I think it's going away because they don't measure money. Like empirically, if you're trying to base monetary policy off of money supply and you're using those M measurements, they don't measure money. You have to, Jeff Schneider says, you know, we would be on M25 by now if you changed every time money evolved a little bit, added some new tools, did some other things, added a new type of financialization and a new type of derivative that acted like money. And so you'd have to be on like M25 at this point. So how is she measuring the supply inflation being around 7%? She's not. She's using M2 most likely. And then this is bad. Okay. Using supply inflation and price inflation completely muddies the water. Now there's no useful information in this whole conversation once you split the definition of inflation like this. So anyway, she says that, which occurs after productivity gains are basically subtracted, blah, blah, blah. That's wasted sentence. Gold's historical price inflation. Again, this makes it null and void if you have to use price inflation because prices go up and down for a lot of reasons. There's all sorts of different components in price, right? Are you measuring shelter prices? Are you measuring food prices? Are you measuring manufactured goods, end goods, intermediate goods, you know, producer prices? Like what the heck are you measuring when you say price inflation? It's completely and utterly asinine, and it doesn't lead you to any productive reasoning. So, but apparently gold's historic price inflation rate is around 0, which means, again, it means absolutely nothing to me. I mean, I get the idea. I totally understand it. I was an Austrian since I was reading novels or reading books, 16, 17 years old. I'm reading Ayn Rand. My dad is a big Ron Paul guy. Got me into Austrian economics, big Mises guy, gave me human action, maybe even for my 18th birthday. So I know this. I majored in economics in school with a minor in math. I'm like done this and I know the economic arguments. I don't have a PhD or anything, but neither does Lynn Alden, by the way. She's an engineer. So this means nothing. This sentence means nothing. Gold's historical price inflation rate for stuff is around 0 or negative. That means nothing. Okay. So I responded, and I'm going to, guys, I know this is not about the halving, but we got a lot of people in here. What's up? Did I tweet out that I'm going live? I should do that. Let's see. Batar, Green, E, Benito, Spagball, Nick 6, Busy Mom. What's up, Busy Mom? Blockchain Boog, Point, Larry Jr., Baron. What's up, guys? Thanks for hanging out on this halving. Let's check the halving clock. We are past the halving, of course. We missed it by a little bit because of, I think the last 3 blocks, I checked it, said 39 minutes. And I'm like, okay, well, I have time to do a 15-minute errand and get back my ass back here. And then it's Halving's there. So sorry I missed that, but this is a happy day. Let's check the price chart before we go back to that tweet. Not a lot of price action, pretty tame. I saw a tweet from Nick Carter. We could play that actually. Let's do that. Let's bring up Nick Carter. He follows me, guys. Woot woot. Is it underscore, 1 underscore, 2 underscores? Nick. There he is. Double underscore. He follows me. So I haven't blocked him yet, but his star is rising. Okay. So here at Bloomberg TV, he says that this is priced in. And actually, let me make sure I'm sharing my audio. Okay. So let's listen to this.
You're seeing the market lose some steam. There was so much excitement. How do you see the halving playing out and ultimately impacting prices?
Yeah, I guess I'll be the contrarian voice on here because, I mean, the halving is a perfectly forecastable event as it has been since Bitcoin's inception, as it was last time. And, you know, just theoretically speaking, an informational event that everybody knows is coming cannot possibly be an informational shock. So should be priced in. What really matters is...
That's wrong because it's not an informational event. Okay, we know what's going to happen. All right. It's like saying that it's not like saying you know the end score of a football game. You know that someone scores a touchdown. Okay, that's an informational event, but what's the final score? Nobody knows. The informational event is that we have the halving, but who the hell knows what's going to happen from it? It cannot be priced in. You can't price in the winner of the football game if you only know that somebody scored a touchdown. So yes, it is an informational event, but we don't know anything else about it. I do like the idea of being priced in. I do like the idea of efficient markets. I'm like a halfway there to efficient markets, but we cannot know. Just like we could not know with the ETFs. The ETFs came in, we had a dip. Was that priced in? No. Then we had a pump. Was that priced in? We had an 80% pump. Let's go to the chart and look at how much that we were priced in. Which one am I sharing? This one. So, guys, this don't forget, the ETF was priced in. Okay? It went, where's my arrow? The ETF was priced in. It was here, or launched like right here, spiked up here, then fell down. Okay? So let's measure this. Let's measure what was priced in with the ETF. We knew the ETF was coming a day prior. It should have been priced in. We knew it was coming weeks and months prior that this would be the deadline. That it was the deadline. But was it priced in? Well, let's see. Like launch was about here. Then it rallied like 10%. That wasn't priced in. Then it dropped from the top down to the bottom, 20%. That wasn't priced in. And then all of a sudden, bam, from the bottom, we can measure the bottom to the top. We went 92%, 90%. From the level of the halving, we can put, the level of the actual like launch, 65%. Was that priced in? Absolutely not. It wasn't priced in. Some factors, like I wrote about prior, some factors were priced in, but this is not priced in. The halving cannot be priced in because we don't know what's going to happen. The informational event, like Nick Carter says, yes, we know someone scored a touchdown, but we don't know the final score. We don't know anything. We don't know how many yards people gained. We don't know anything about the game. So that's what I have to say about that. Let's go back to Nick Carter. And it was this one. And let me get back to the screen.
The demand side, not the supply side. The halving represents an issuance reduction on an annual basis of 83 basis points. That's pretty marginal at this point.
Oh my God.
So I would say the factors that really matter.
His star's rising. He's reading off a card. Let's go back and listen.
Not the supply side. The halving represents an issuance reduction on an annual basis of 83 basis points. That's pretty marginal at this point. So I would say the fact.
What? I'm sorry, I missed that one more time.
Really matters is the demand side, not the supply side. The halving represents an issuance reduction on an annual basis of 83 basis points. That's pretty marginal at this point.
Okay. let's go to this, guys. This is the BM Pro dashboard, all right, spreadsheet. And we're looking at this. Let me zoom in here. And we're looking at this particular metric right here. Transfer volume to exchanges from miners. Okay. This is a 30-day average. And you can see 30 days ago, it was about 3,500 a month from miners going to exchanges. Last week, it was 2,100. That's a dramatic drop. Is that priced in? Then today it was down to 2,055, and these aren't exact. I think these are glass node numbers. Dylan and Sam Rule still control the back end of this spreadsheet, but that's a significant drop. I mean, that's 1,500 in a month. Yeah, and we are talking about some people like Mr. 100 that's stacking 400-600 Bitcoins a day and stuff like that. But this is flow from miners to exchanges. And is that priced in? So the thing is, I wrote about this as well. And actually, I'm going to share another screen. This one. Okay. I'm going to move this over here so I can see what I'm doing and pull this up. So this was today's BM Pro. And in here, I talked about, let's see, where would it be? Okay, I got to find this. Hold on. Where'd I put it? Okay, one-way function right here. So the halving is a one-way function, okay? There's no going back, right? This is how we should look at it. So the halving is a one-way function. The hoarding behavior incentivized by the halving, which is what I just talked about, the miners are sending less Bitcoin to the exchanges. They're changing their behavior moving into the halving. We saw all the big public miners as well, hoarding a lot of Bitcoins. Who was the big one last week? I think it was Hut 8. I think they mined 231 Bitcoins last month, and I think they sold 4. I think that was the one that I'm thinking of. And they have over 9,000 Bitcoins now. So, like, the miners are doing this activity where they're not selling their Bitcoins, they're hoarding their Bitcoins, they're sending less to the exchanges overall, right? And so, how can that be priced in? It can't be. But this is a one-way function. So, they hoard it in anticipation of the halving. And then the halving comes and it's reinforced by the halving because it cuts supply. And they can never undo that hoarding, right? So even if they hoarded before and then they unhoard and they sell, there's still the fact that the halving has occurred and their inflow is cut in half. So the halving incentivizes hoarding behavior, and then it reinforces that hoarding behavior in a one-way function of tightening supply. That's fit a lot into that one sentence, and readers are probably like, what the hell is he talking about? But anyway, okay, let me see. Is anybody raise their hand? Anybody want to come in and chat on this halving day? I think when I'm sharing my screen, you still can raise your hand. I don't know if I've ever done that before, but feel free to come in. Oh, Green. What's up, Green? Happy halving. Got to unmute. Let's see if I can unmute you myself. Unmute. No, I muted you. Allowed to speak. You can try to unmute again there, Green.
Can you hear me now?
There you go. What's up, man?
Hey, buddy. How come like the transaction fees are going through the roof at the moment? It's my first halving, so I don't know what to expect.
Oh, it's your first halving. Well, congratulations
Yeah.
for making it. Your first halving. Let's go to mempool.space and see what the transaction fees are doing. Whoa, look at that. Oh, you know why that is? That's because there's a bunch of spam from the inscriptions. The
How could you
inscription,
tell like right off the bat though?
I can't tell just like immediately right here, but if we go back into here, I did write about that here. I said inscription activities around the halving. Inscribers are gearing up for the halving, targeting the first block of the new reward epoch and the last of the current epoch. So they're trying to get into that first. So they spammed it big time.
So is this like one of those like attack vectors you like talked about sometimes, or some people are talking about?
Say that one more time.
Is this like one of those attack vectors that they're trying to do, kind of increase the block size or whatever it is? You think, or
no? I think it was like scammers just thinking that they could market their new inscription NFT token or whatever, saying, "Oh, this was in the first block of the new halving, pay me double." So I think that's what it was.
okay.
Yeah, it should clear up pretty quick. I don't know. Let me look at the chart here.
Good for the miners, that it seems.
Yeah. Wow, look at that. I wish I could. Okay, it looks less impressive right here. But we can see 2,000. If you can look at the little table on the left-hand side, 2,000 Satoshis per virtual byte.
Yeah, it's
That
insane.
it's ridiculous, man.
Yeah. What are all those poor people going to do with like 1,000 sats in their account?
Well, I think this is going to clear up $154 to get in. I mean, I kind of wanted to on the issue today. I wanted to add a little thing here saying, hey, if you want to transact, do it now, because we published this about 5-6 hours ago. Yeah, well, this is interesting.
Off then at least. Damn.
Go ahead. What? Sorry, I didn't hear that.
Hopefully on the weekend it cools off so people can move from cold storage. Then.
Yeah, absolutely. Well, it usually cools off on a weekend. That's downtime. But inscriptions have been. I mean, I haven't been tracking it super closely, but I think inscriptions were taking advantage of lower traffic times, and so they have kind of leveled out the number of transactions that happen on the weekend versus the weekday. But I do think that Friday and Monday are still the most busy days for transactions. But if you take a look at this chart here, I just highlighted some of these big periods where we had spiking fees, and it did correspond with some volatility, right? We fell down right here. You were high fees. Yeah, and then this high fee period at the beginning was a pump, and then it was a dump at the backside. So that was higher volatility time with these peaks. And then this one was in this dump was when the transaction fees rose. So higher transaction fees tend to correspond with volatility. This one over here was actually to the upside, right? So there can be volatility both ways. And if we're seeing the mempool like this right now, we'll see what happens to price. But
yeah, it'll be interesting to watch over the weekend for sure.
Yeah, to see if it clears up.
Cool. Yeah, that's all I had to say.
All right, man. Thanks for joining.
Yeah.
I wonder. I know Bitcoin Magazine's doing the halving thing. I'm sure there's a ton of other people, but this is our close knit community doing the halving. Okay, so that was that. What else did I have for chart of the day? Was just this one on this thing. But I did talk about that, what to expect in around the halving. These inscribers, man. I mean, it's like it's totally like altcoin scammers. It's totally like, and did the runes launch today or something, or launched at the halving? It's totally these altcoin minded scammers. That's what this is all about. But what's good about this, okay, so you can run an altcoin scam on a different network, and the network is totally garbage. It's running like 4 people's nodes that are the founding team, and it's totally centralized, and you can have 0 transaction fees basically, and 1,000 transactions per second or whatever, and they can run their scam, and there's no like cost to it, right? Well, on Bitcoin, there's cost to the scams. You have to pay the transaction fees, and you think that these people, I mean, this is going to hurt a lot of these scammers, because they're going to get something minted for thousands of dollars, because you need multiple transactions for these things. They're going to mint something for $1,000, and then they're never going to be able to sell it. Or maybe they mint something that has 10,000 tokens, I don't know, and it costs them $100,000 to just create this thing, and then they will never be able to sell it. So on Bitcoin, at least, we have a cost function that helps self-correct some of these things, which I think is very important. Okay, let's go back to Lynn Alden's tweet. Which screen am I on? This one. Okay. We're going back in here. Oh no, wait, we were doing Nick Carter. Let's listen to some more priced in from Nick Carter.
So I would say the factors that really matter for the Bitcoin price are aggregate liquidity conditions, number one, ETF flows, which have been weak. Actually, both of those things putting pressure on the price. Catalysts like that, whereas the halving is something that everybody understands. So it shouldn't really be a factor in terms.
Everybody understands who exactly? You're talking about like maybe, well, depends on what level of understanding you're talking about too. I would say there's probably 100,000 people in the world that have a very firm grasp on what's going on with the halving. And then out of the Bitcoiners, there's maybe 100 million Bitcoiners, maybe even 500 million at this point, who knows? But I would say 100 million would know what the halving is, at least in detail enough to tell somebody about it. 100 million people. But they have no idea about the consequences of it. They don't know about the deflationary spiral. Like what we were just covering here on this other thing where I'm talking about the one-way function. So the one-way function is that the miners hoard prior to the halving, and then the halving comes in and reinforces that level of hoarding. And you can never go back to the previous level of flow. So it takes a while. Maybe they start unhoarding, maybe they start selling, but they can never reset the clock to the previous level of flow. They're always going to be reset to a higher restrictive level. Now, how many people in the world could talk about that? I think we're limiting ourselves now down to maybe 10,000 people. So Nick Carter here, who probably could talk about it like that, he is saying everybody knows it. Nobody knows it. Very, very few people know it. And just think about the experts that they're writing for the mainstream media and saying this is going to be a horrible event for the Bitcoin miners, and there's going to be a culling of Bitcoin miners, and there's going to be a crash, and then the security is going to drop off of Bitcoin, and it's game over, and Bitcoin's dead now. Not that quickly, but there's a lot of articles like that were talking about Bitcoin and the halving. You think they know? Bitcoin, everybody knows about the halving. Ridiculous. You guys can tell I've had a couple cocktails, but let's keep going.
In terms of price formation here.
Well, demand is a good thing to talk about here for a moment because...
Okay, I'm going to rewind this for just a second because I want to listen to the whole thing. I'm going to try not to interrupt.
Excitement. How do you see the halving playing out and ultimately impacting prices?
Yeah, I guess I'll be the contrarian voice on here because, the halving is a perfectly forecastable event, as it has been since Bitcoin's inception, as it was last time. And, just...
Oh my God, I had to interrupt. I didn't make it 20 seconds. Just like it has been last time. Well, what happened 100 days after the halving last time? 6x in price or something like that. What happened 100 days after the first halving? 20x or 10x in price? What's going to happen after 100 days after this halving? Probably another one, right? Like, perfectly forecastable event. Like it has been. He used historical examples. And the historical example is it's not freaking priced in, brother.
Theoretically speaking, an informational event that everybody knows is coming cannot possibly be an informational shock. So should be priced in.
Do you even get that? An informational event that everyone knows is coming cannot be informational shock. Guys, do you understand? This depends on how you're defining the information. Like I said, I know that someone scored a touchdown, but I don't know who won the game. So, yeah, the game is informational shock. The touchdown isn't.
Really matters is the demand side, not the supply side. The halving represents an issuance reduction on an annual basis of 83 basis points. That's pretty marginal at this point. So I would say the factors that...
Actually, he's wrong there. The halving represents a 50% reduction in issuance. So listen to those words again. He said the new issuance is cut by 82 basis points or whatever. That's not the case. It's cut by 50
points. That's pretty marginal. The halving represents an issuance reduction on an annual basis of 83 basis points.
Am I crazy? That is totally wrong. Annual issuance reduction. The issuance reduction is cut in half. So he knows this. I'm not saying he's an idiot. He knows this, but he's saying it in a way, which this is not true, but he's saying it in a way so that he can downplay it as much as possible. Why would he be doing that? You know, watch what they do, not what they say. And Nick Carter, I don't know, he's not that big of a player or anything. He's major shitcoiner. And why would he be saying this? I don't know. If you guys want to raise your hand and come in, tell me why what's his angle here?
That's pretty marginal at this point. So I would say the factors that really matter for the Bitcoin price are aggregate liquidity conditions, number one, ETF flows, which have been weak. Actually, both of those things putting pressure on the price. Catalysts like that, whereas the halving is something that everybody understands. So it shouldn't really be a factor in terms of price formation here.
Well, demand is a good thing to talk about here for a moment because you saw that exuberance in the Bitcoin ETF. But
before she gets into here, I'll rewind it to hear Oliver saying, but demand, that is true. That is true. But the halving creates its own feedback loop of demand. If we go to, let's go to, Google Trends. Okay, Google Trends. Let's see. Let's look up Bitcoin halving. Explore. What do we have here, guys? Look at that. Look at that. This was the past day. But let's go to the past 5 years. No, that wouldn't even capture it. 2004 to present. Okay. So here's the halving. Look at that little blip. Nothing. Here's a halving in 2020. That was a bigger blip. That was a significant blip. But look at this estimated. So the Bitcoin halving creates its own marketing. It creates its own social atmosphere. Its own social pumping. And, okay, the last one didn't price in this blip. And the one before that didn't price in this blip. But we can't even barely freaking see. I wish you could do it exponential on this. But these couldn't price in. This didn't price in. What's this? Is this pricing in flat for the last 6 weeks? Is that what pricing in is? Flat for the last 6 weeks. Slightly down. That's pricing in the halving? I just don't know how Nick Carter can say this with a straight face. I wonder what you guys think. Let me check to see if you guys are making any comments here. Sailing Nut doesn't hear anything. Are you guys not hearing anything? Sorry. Let me mute and come back. Check. I see this going. Yeah, sorry if the audio, because I'm not touching anything, so it should be good. But okay. Back to Nick Carter. Oh man, this guy. Thanks, Spag.
What happens if that starts to taper off into the year now that the initial rush is gone?
Yeah, that's what we've seen. And, the flows have been pretty flat.
Here for a moment, because you saw that exuberance in the Bitcoin ETF, but what happens if that starts to taper off into the year now that the initial rush is gone?
Yeah, that's what we've seen. And, the flows have been pretty flat in the last couple of weeks. If you look at the 13F filings, we're not yet seeing major allocators, allocating to the ETFs. You haven't yet seen it being incorporated into model portfolios. That's something I would look forward to in the next 3 to 6 months.
We've seen Fidelity add it to the Canadian ETFs. There's talk about others. There's talk about the Hong Kong ETFs coming out. There's all these filings, like he said, where what they do is these hedge funds or wealth managers that have these products that my kids being loud. My in-laws are in town. They're playing cards. They're a card family. So these ETF or these hedge fund managers do update their filings of what their allocations are. I've seen one is 5%. Stand by. All right. I saw one that was allocating up to 5%, and then the rest of the portfolio. Let's see. Eric Balkunas said that. Let me go to Eric Balkunas, and he said, scroll down. No. Okay, that's not it. That wasn't it. Okay, so here's one. This Quattro Advisors from Pittsburgh. They bought 19 million of iBit. Okay. That's their third biggest holding now, 5%. 5%. And it's notable because the rest of the portfolio is boomer stuff, blue chip stocks, boomer special, he says. So the boomer specials are investing 5%, and these are just starting to roll in. These 13Fs are just starting to come in. That's what he's talking about. Nick Carter's talking about these filings. We don't know. Obviously, let me look at the average. Let's see. The last day I updated, though, I haven't updated my flows for a long time, since the 11th. But as of the 11th, we're still averaging 190 million per day, and there have been some outflows this week. But I bet we're still averaging over $100 million a day coming into the ETFs. And we're getting the Hong Kong things. So what Nick Carter is saying here is, I don't think a valid thing. They're just starting to kick off. And think about all the other wealth advisors that are trying to get a piece. We talked about Morgan Stanley and UBS. They're like racing to get approved to start offering these things to their clients and stuff. So there's not a lot of places. Most of the demand has come from these marginal people, like that Quattro Advisors that I just showed you. Those are marginal players. They took 19 million. That's 5%. So what is that? 20 times 20. That's $400 million fund. What about the $1 trillion funds? They haven't even got access to this yet. Vanguard isn't letting their people invest. So Absolutely not. We have just seen the tip of the iceberg of the demand. And now we're seeing the speculative interest come in. When we see inscriptions pick up, I've talked about inscriptions are the speculative measure. In the past, it was altcoin season. Altcoin season was a speculative measure. What is the retail FOMO like going on out there? What's the Wall Street Bets crowd doing here? Okay. Now, altcoins are kind of struggling. Ethereum is still under 0.05, right? They're not pumping relative to Bitcoin. The speculative interest measurement now is the number of inscriptions. That's what I think. And we've seen a recent uptick in that. So we're seeing a recent uptick in speculative interest in Bitcoin. So there you go. Let's go here to his response.
Putting pressure on the price. Catalysts like that, whereas the halving is something that everybody understands. So it shouldn't really be a factor in terms of price formation here.
Well, demand is a good thing to talk about here for a moment because you saw that exuberance in the Bitcoin ETF. But what happened?
I hate to keep stopping, but remember I said that supply it's a one-way function to less and less supply. Everybody knows about the halving. No, they don't. And when they find out about the halving, what just occurred, why it's such a big thing, maybe price pumps 10%, 20%, goes back to all-time highs. People are going to be like, what's this deal about? Oh my gosh, it's a one-way function of less supply. We got to get in, right? So the halving is a marketing tool all on its own.
If that starts to taper off into the year now that the initial rush is gone.
Yeah, that's what we've seen. And, the flows have been pretty flat in the last couple of weeks. If you look at the 13F filings, we're not yet seeing major allocators, allocating to the ETFs.
No, we're not seeing major allocators publish it.
Haven't yet seen it being incorporated into model portfolios. That's something I would look for.
They're trying to. That's why Morgan Stanley and UBS are racing, and Fidelity does have it offered in their model portfolios.
Forward to in the next 3 to 6 months. It appears, based on those filings, that it's actually mainly sort of retail investors piling in, and certainly that's what led the rally.
Boomer Special, remember? Boomer Special is not retail investors piling in.
From the kind of 30,000 range to sort of the 60, 70,000 range, which has been very impressive. I mean, we're seeing, these have been the hottest ETF launches of any asset class probably in history. But we have seen a softening, and the outflows from GBDC continue to be a factor there. And the ETF in Hong Kong, I think, is probably not as much of a factor as well. That fast follow against the domestic ETFs here, because mainland Chinese citizens will probably not be able to buy that. So the ETF for now is.
They will. I mean, I'm no expert on this, but I think they can buy 50,000 a year, right? Or they can at least invest 50. Maybe the mainland people send 50,000, and they can put 10,000 into the ETF, something like that, because then another 90 would go into other things in Hong Kong. But Hong Kong also opens up Taiwan. It opens up other, the East Asian economies to a Asian ETF. And that's a big deal. That's a big deal. They'll probably all start launching their own ETFs, I'm guessing. But everyone's going to want to get access to this. Oh my God, what did I do? Back. There we go.
Seeing the market that starts to taper off into the year now.
Flows have been pretty flat in the last couple of weeks. If you look at the 13F filings, we're not yet seeing major allocators, allocating to the ETFs. You haven't yet seen it being incorporated into model portfolios. That's something I would look forward to in the next 3 to 6 months. It appears, based on those filings.
But wait, how do you price in if you're looking forward 3 or 4 months, 3 to 6 months? See, that's the problem with the efficient markets hypothesis. We know that there's unknown unknowns out there, and we also know that there's known unknowns. And how can you price those in? You can't. So the halving and the ETF launches cannot be priced in.
that it's actually mainly sort of retail investors piling in. And certainly that's what led the rally from the kind of 30,000 range to sort of the 60, 70,000 range, which has been very impressive. I mean, we're seeing, these have been the hottest ETF launches of any asset class probably in history. But we have seen a softening, and the outflows from GBDC continue to be a factor there. And the ETF in Hong Kong, I think, is probably not as much of a factor as well. That fast follow against the domestic ETFs here, because mainland Chinese citizens will probably not be able to buy that. So the ETF for now is less positive for Bitcoin.
All right. So let's go back to Lynn Alden and talk about this. All right. So I talked about how she responded and how this stuff doesn't really make sense. And so this was my response to her. So you're right. Gold's inflation rate is about 1.5% today. Thank you for reinforcing my point. That's what I'm saying. But it could easily be 2% if the value rose dramatically, because it's not like Bitcoin, where Bitcoin's inflation rate or issuance rate can't increase, but gold's can. It can go from 1.5 to 2%. It could go to 3%. If they start doing asteroid, it could go to 50%, And so, yeah, the gold has an inflation rate, 100%. But gold bugs never want to, I never wanted to admit that. Gold bugs never wanted to admit that. But it does have an inflation rate, and she even confirmed it, right? Okay, so price increases happen for many reasons. One is monetary related and distorts price information. So if a price increase happens because the Straits of Hormuz shut down and oil goes to $200 a barrel, and it's relatively inelastic demand, meaning that people have to buy it. So they have to buy it. They have to do that, and they have to cut back on other things, right? But also the price of gasoline gets put out through all of the economy. So price increases, general level prices, can go up because something like the Straits of Hormuz gets shut down. All right. But those happen for lots of reasons. We could even have a bird flu, and it wipes out all the chickens, or there's some sort of bacteria or fungus that kills all the wheat crops, or we have a global pandemic or we have a war that shuts down international trade of fertilizer. Okay, so these types of things can happen, and prices can go up for many reasons. But if it's not monetary related, it is actually informational. It sucks, prices go up. But if it's not for money printing reasons, there is a informational reason behind it, and the price is going up. Like they always say, the cure for high prices is high prices. Okay, so we don't care about any other reason for price increases, because they're healthy. I mean, they suck, but they're healthy because they kick off market dynamics that will fix them. The only one that we care about is the monetary related one, and that is supply increase. So why are you muddying the waters? Why do people muddy the waters and talk about price inflation and supply inflation? It creates a situation we can't think about these things properly. So anyway, this guy responds, and I think, right, but she's saying this does not equal this. And okay, I understand it. I say, I get what she's saying. Like I said, I've been doing this. I've been involved with economics for how many years? 25 years. Okay? I have a degree in economics. I've been involved with Bitcoin for 12 years. I know what she's saying. I know exactly what she's saying. And she's bringing attention to my exact point, which is I baited somebody into saying it, and lo and behold, it was the great Lynn Alden, who I do have a lot of respect for. And yeah, anyway, so then I say that gold has an inflation rate. And that's why I emphasize that part of her answer. She calls price rises price inflation, and then has to qualify actual inflation as supply inflation. That's counterproductive to reasoning about it, because prices rise for many reasons. And the non-monetary reasons are important and informational. They don't belong in a monetary debate. Why should I have to talk about COVID lockdowns in a monetary debate? I mean, if that's where it goes, okay. But come on now. This is not the proper venue for talking about shutting down the Straits of Hormuz means the Fed has to cut rates. That's not the proper topic. Those topics don't meet. And that's what gets us into the problem of talking about curing these things. Curing a supply chain crisis with monetary policy is absolutely asinine and counterproductive. And that's from people talking about price inflation and supply inflation as equal things. They're not equal things. This one doesn't matter. Price inflation does not matter. It sucks, but it doesn't matter from a monetary sense. Only this one matters. They don't belong in a monetary debate. It is only supply inflation, as she qualifies it, that causes negative distortions. Other distortions caused by price inflation that aren't monetary related do not cause negative distortions. They cause positive distortions. Price rises suck, but if they're not monetary related, they're good because they tell us information about the market. The reason for gold's historical price inflation of 0, despite actual inflation of 1.5%, is due to market-dependent expansion. Now, this is kind of a queepy point, but it's very, very important. Okay? So I qualify this by saying gold mining expands at roughly the rate of the average economic growth because it is economic activity. If GDP is going up by 2%, gold mining is probably going up by 2%, and hence the supply of gold is going up about 2%. Okay, so it's not that the goal, it's not the this 1.5% leads to what she said of price inflation of around 0. Okay, that's not what leads to that. Because how would that even happen? Okay, how would the economy, I'm mining gold at 1.5% increase flow every year, and somehow just magically the prices all come out to be around 0, price increases and stuff. What's the mechanism behind that? There is no mechanism behind that, because it's actually, I keep hitting my mic. It's actually the reverse of that. The reason why gold is growing by 1.5% is because the economy is growing by 1.5% every year. The economy produces the inflation in gold. If the economy is growing by 10%, most likely demand for gold, the demand for money would grow by a lot, and the price would go up, and then you would mine more gold, and then you have a higher inflation rate in gold. Okay, the gold supply would go up by 10%. That's a much more like commonsensical way to understand this. The price inflation does not cause the supply. The economic activity causes the supply to go up. Okay. But it's a detailed, nuanced point that I haven't heard anybody else talking about. Okay. This is not possible with Bitcoin, by the way. So if the economy is growing by 10%, you know what that means? The value of Bitcoin is growing by 10%. If in the world where Bitcoin, doesn't have any halvings left and 21 million and all that, and the economy grows by 10%, the price of Bitcoin is going to appreciate by 5 or 10%. It's going to grow by the rate of economic activity. Now, in gold's situation, the supply increases by the rate of the economic activity. It's a very different model. And people don't even get this yet. When this sinks in to people, this is the number go up technology. You guys get it. You're here. But number go up technology is this exact argument right here. Lynn Alden does not understand number go up technology. If she did, she wouldn't write something like this. She wouldn't qualify supply inflation and price inflation. Okay, let's finish this up. That is still inflation, however. Okay, so yeah. Lynn is discounting actual inflation for some tangential point about price inflation. And she's muddying the waters. People that talk about price inflation are muddying the waters. There is no such thing as price inflation. There is no such thing. It's price rises or price increases. Price inflation is a deceptive term that confuses everybody about number go up technology and why gold's inflation rate is 1.5% and Bitcoin's inflation rate will be 0. Even at 0.8% or whatever, what's the inflation rate right now after the halving? 0.8%. Okay. If the economy grows, like let's just take an example here. There is like 0 net price inflation. So CPI goes to 0. Okay. But the economy is growing by 3%. What does that mean? That means the supply of money is growing by 3%. Because you take the supply of money growth minus the economic growth and you get 0. Okay, so prices are flat. Now you think about Bitcoin. All right. Even in the best case scenario, if we have economic growth above the issuance rate of Bitcoin, we will get a price appreciation of Bitcoin. So if we have economic growth at 3% and we have Bitcoin issuance at 1%, we'll get 2% increase in the price of Bitcoin every year. That's how this works out. And you can't get to that point of understanding if you talk about supply inflation and price inflation. So anyway, beat that horse to death. Let's take a look at price. See what's going on with price. You guys can raise your hand to come in. I'm watching the ticker over there, or the chat. Let's pull this up. No comments yet. Am I in the right window here? Where am I looking? I'm going to go back. Oh, there we go. All right. And we'll go down to the 5-minute just to check out how the halving is coming along. Looks like I tried to break down, but there is some price movement up, so we're good. I did write that I expected the halving to occur higher than this. I think I can't remember exactly what I said. I think it was on the report this week, something like between 65 and 70, something like that, just north of there. But I do expect in next coming days to rally here pretty hard in price. So that's it. All right, I'll wait to see if there's any hands. That's all I have for today, guys. Any hands? Let's take a look at Mr. 100. See what he's doing, what he's up to. Let's see, what's today, the 19th? He bought a hundy. Let's see, he bought a hundy. And then that's all today. But yesterday he bought a hundy 200. The 17th, he had a lot of buys. How many is this? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. But this one's 0. So 11. So he bought 1,100 Bitcoins. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 10. He bought 1,000 Bitcoins on the 17th. I mean, he's stacking. What's his total here? Total 62,000 Bitcoins, man. This guy's trying to go Michael Saylor on us. All right. Any hands? No hands. All right, guys. Well, that's going to do it. Happy halving. Hope you guys have a good weekend. Spend time with friends and family. Know it's important. All right, guys. Well, have a great night. And I'll see you guys later. Bye.